Hello, everyone. My name is Craig Lynch. I'm a partner in Parker Poe's Real Estate and Commercial Development Practice Group. I handle virtually any kind of commercial real estate transaction you can imagine, but I've got a particular emphasis on the following industries: healthcare, automotive, franchisors and franchisees of national brands, and inbound transactions where foreign entities are looking to acquire United States real property interests. I'm excited today to be joined by Kathy Feucht, and I'm going to let her tell you a little bit about herself.
Hello, everyone. As Craig mentioned, my name's Kathy Feucht. I'm a partner at Deloitte. For those of you not familiar with our organization, Deloitte is a professional services firm operating globally in 150 countries, over $67 billion in revenues. And I have the privilege of wearing the hat of serving as our global real estate sector leader, where I oversee over 7,500 professionals that have designated real estate as their primary workspace at our firm.
Excellent. Well, I was at a seminar yesterday that Kathy spoke at. She's got some great data to share with us, and I think you'll find it very interesting. Here we are today. It's a Thursday morning. The Fed is going to meet later today. I think we're all expecting a rate cut, but how do you see things unfolding in terms of the trajectory of interest rates and the impact that those have on commercial real estate?
Yeah. Good question, and a question often chatted about as I travel the world and talk about where the economy is at in the macro economy. Of course, here in the U.S., we've had one rate cut this year that I think was largely anticipated, and I also feel the potential rate cut today is probably largely anticipated. So the rate cuts this year, I think, may not have a dramatic impact in how that parlays into what happens with commercial real estate. But I do think here over time, including anticipated rate cuts next year and perhaps rates moderating to somewhere not where they necessarily were pre-pandemic, but call it maybe in the mid fours, ultimately will have a trickle-down effect on lending, valuations, and where ROI models play out, which impacts, of course, transactions and lending activity in the commercial real estate space.
I know some people have been staying on the sidelines, watching what's happening with interest rates, so I'm hopeful that with a downward trend, we may start to see even more activity. Mm-hmm. One of the things that's impacted by interest rates in particular is residential, and even though it's not commercial in the true sense, a lot of folks that we work with put together large tracts of land for residential developments, and also in terms of growth here in Charlotte, and we're coming to you from Charlotte today, folks who migrate here need places to live. So how do you see things playing out on the residential front, Kathy?
Yeah, the housing market is interesting, whether you're talking about single family or multifamily. I think if you look at trends that have started even pre-pandemic, and you look at trends around the globe, the affordability of housing was an issue, going back pre-pandemic. And then I think with the strong demand that occurred when most geographies were on lockdown during the pandemic and people were relocating and still had reasonably low interest rates around the globe, demand for housing only increased. And what we've seen in a post-pandemic world with elevated interest rates is probably that demand has slowed a little bit. In the U.S. here, at least, people are locked into relatively low interest rates, and that affordability demand and that affordability issue is still at hand here, and maybe more exacerbated than it was even 5 or 10 years ago. So I do think if interest rates are lowered here over the near to medium term, there will be a little bit more opening up. But home builders have adjusted, right? So I think supply is generally still suppressed, at least from where it had been. And pricing is still elevated because of lower supply, I think, in the marketplace for single family homes. So that in and of itself is not helping the affordability issue, particularly for first-time home builders. In fact, I read an interesting article from Bloomberg that was put out this week, and I think a lot of the source data was from the National Realtors Association, but the median age of a home buyer here in the U.S. is now 38 years old, and that is up almost 10 years from where it was in the 1980s. And the other statistic I found particularly interesting is of the homes sold in the last year, 24% of those were first-time home buyers. And that is the lowest percentage rate of homes sold since the early 1980s. So there's definitely an interesting market dynamic going on there. And I know Charlotte has had the benefit of having some population migration over recent years. I'm not sure exactly what you're seeing here in the market space.
It's still an area that's attracting other folks to move here. A lot of young people are coming to our market. Typically, they land in multifamily first and then migrate to residential down the road. But we've experienced the same dynamic where in that affordability range, inventory is super low. Prices have increased dramatically, particularly in the higher end market. So it's really kind of mirroring, I think, what you're seeing nationally.
And that has a direct correlation to your point on multifamily as well. We actually just put out our white paper on our 2025 CRE outlook. And part of that is based on a survey conducted on real estate C-suite executives from around the globe, almost 900, 13 countries represented. In that survey, we asked about real estate fundamentals and real estate subsectors where there was still some optimism and strong interest. And multifamily is still proving to be one of the sectors that is still, I think, high in demand and attractive for a lot of investors. So
it's been very robust here in Charlotte, and just outside of our window today, there's a big project that's coming online. So it's certainly helped us in terms of our growth trajectory. Yeah. Well, one of the things that I guess changed dramatically during the pandemic is we were all working remotely. And now, obviously, there has been a return to office. I'm not so sure that everybody's of like mind, both in terms of workers and employers, but what are you seeing, A, on office space, and B, return to the office in terms of work?
Yeah, well, I'll comment on the latter part of the question first. I personally believe, at least here in the US, there's still a balancing act that's occurring between employers and employees on what is the right balance for return to work. Certainly there's been a lot of headlines, to your point, of employers wanting employees to get back to the workspace. And I think there's still a high demand for employees at least wanting the flexibility and the optionality of where they work over time. So we'll see how that plays out. So I think the demand for office space is still figuring its way out, although probably moderated from the trends that we see coming out of the pandemic. So that plays into, of course, the demand for office space plays into what type of supply is out there. And I think it's still very much a tale of a quality of asset and where you're located on where office demand is at. If you are in newly developed Class A office space, I think in most geographies here in the US, that space is in high demand and vacancies are a lot lower than, let's say, Class B or Class C office space. And there's going to be things that need to work itself out of the system, I feel, here over the near and medium term and maybe even longer term. Now, getting back to our earlier conversation, I think interest rates lowering and hopefully valuations improving helps the situation. But there are a lot of impending, maturities on loans coming due. I'm sure not all of the office space in the Class C space is going to be coming back as it was. So does that get repurposed? Does it get sold and converted into something else? Time will tell, but I think there's still some balancing and reckoning that needs to take place in the market for certain asset types.
Well, conversions can be difficult. I know here in Charlotte, there's one conversion project that's about to get underway, but talking to folks in the city offices here, they tell me that there are only about 2 other sub-Class A office buildings that are susceptible of conversion. So I don't know what you're seeing on that front, but it is something that's happening here, but it's expensive for sure.
It definitely is expensive, and it's expensive even just to retrofit for sustainability or to build out to different types of space than what it was originally designed for. I've read different statistics on this, but most statistics are hovering around perhaps in major cities around the globe, only 10% of their at least high-rise office space could be converted into let's say residential, where there is a need, or other purposes. So that the financial cost of that, the environmental footprint of doing some of that is costly. So I don't think that's 100% of the solution, maybe partially a solution for some of the space.
One of the things that kind of took off during the pandemic was shopping online. I think a lot of us were doing that during the time that we were sheltering in place. What are you seeing on the bricks and mortar side for retail right now?
Yeah. So I think, coming out of, I'll comment on e-commerce first, but coming out of the pandemic and hockey stick growth for e-commerce during the pandemic while all of us were locked down, I think has moderated. And so there's still growth on the e-commerce side, but it's at a more moderated rate. Bricks and mortar retail is interesting. There again, there were trends happening before the pandemic, right? I think we were seeing consolidation, kind of the shopping malls that we grew up with in the 1980s and 90s were being repurposed and rethought to bring more services, gyms, movie theaters, experiences at those. And I think that has benefited well, and actually probably even a little bit to my surprise how well retail, bricks and mortar retail has evolved coming out of the pandemic. People have a desire to get back out and experience these centers and what these centers have to offer in their communities. So I think there's there's life again in the retail space. I think there's still some evolution happening there. We talked a little bit earlier about the pharmaceutical space and what's happening there and how e-commerce and omni-channel is maybe converting some of that space. But I think I'm optimistic overall on bricks and mortar retail and what it has to offer folks.
That's good. Yeah, I think there is a interest among the population of getting together and doing things outside their home. I think people got a little bit tired of staying at home, and humans, I think, like to interact with one another, and that obviously impacts the dynamic in the office space too. So,
for sure.
Yeah. Well, Kathy, I know that the U.S. population is aging, and the people that operate in the commercial real estate space aren't immune to that. You told me a little bit about how a lot of folks that are in this area of business are aging up, and I think it presents some issues for us. How do you continue to be expert in terms of your status as a provider, and how do you recruit and train up the next generation so that they've got opportunities in the commercial real estate space?
Yeah. Actually, we put out a white paper earlier this year on that exact topic. And one of the interesting data points that came out of that study that we worked with our human capital consultant folks at Deloitte is that approximately 40% of real estate professionals will be at or near retirement in the next decade. And that percentage, as we compare that across the industries we track at Deloitte, that's actually one of the highest percentages of workforce population compared to other industries. So I think that's an interesting data point and something for organizations to take away, to your point, to think about how are we preparing the next generation? How are we attracting the next generation of talent? And maybe how does the play between new technologies today and talent played into our organization in the future?
Well, one last question I've got for you is you had shared yesterday at the presentation I mentioned earlier some statistics based on a survey that you had performed of people that operate in the commercial real estate space about what they see down the road. And I thought that was very insightful, and I was pumped up about it. So I hope you'll share a little bit about what you learned.
Yeah, so good news, I think, for the folks that operate in the CRE space. We conducted the survey and asked, again, almost 900 executives where they saw 2025 and the outlook for 2025. And the great news is, as you look around the globe, almost 90% of the executives are optimistic about next year. We asked them specifically about if they expected their revenues to decrease, stay flat, or increase. And almost 90% said they expected their revenues to increase. And of that 90%, over 60% feel that growth will be at 5% or greater. So I take that as a really good sign that we're on the cusp here. Perhaps we've hit the low end of the real estate cycle, and there's better things ahead. And when you parlay that with perhaps some moderation in inflation, interest rate cuts, not just here in the U.S., but more broadly globally, and in addition to that, the survey also, we asked them about real estate fundamentals, leasing, capital markets, lending, and ease of financing. 68% were optimistic that that'll play out better than it has been over the last couple of years as well. So I think there's some real optimism out there. That sentiment seems to be consistent. I was at a real estate conference a week ago, and those sentiments were broadly shared in the circles that I was conversing in as well. So hopefully you're experiencing that here locally, and if not, I think more broadly, it's some good news for the industry.
I think at the end of the summer, we started seeing an uptick in activity. So I'm hoping that our colleagues have very good crystal balls and that they're being read accurately, which would be great. Well, we hope you've enjoyed this presentation. We're excited to have Kathy here with us today to provide the insights that she did. Our next commercial real estate event that Parker Poe will host takes place on March 18th. We'll assemble over at Quail Hollow Club for our annual Roundball and Real Property Review, and we'll have an opportunity to watch online if you're not here local, or if you can't attend, or if you live outside of North Carolina. Thank you for joining us today, and I hope that you all have a great holiday season and that 2025 kicks off to a great start for you. Thanks.